Markets hate uncertainty. When a governance shock hits, investors don't wait for a verdict. They mark down prices and move to safety. That's not cynicism. That's price discovery. From September to October 2025, iyon mismo ang nakita natin. As allegations on flood control and public works spread, the PSEI slid towards 6,000 and briefly dipped below. The tape was sending a message. This is a domestic overhang in a world that isn't uniformly hostile. Let's take a look at a timeline snapshot. On September 23, selling pressure as a scandal widens closed near 6,118, down about 1.5%. On September 30, dips below 6,000, closing near 5,953, a key psychological line breaks. On October 1 to 3, rebound attempts, a brief relief rally. On October 6, it softens again as legal actions multiply. The same day, the exchange head warns the scandal could keep weighing on stocks without a swift, credible probe. The statement validated what the tape was already saying. This wasn't a crash. It was a de-risking in waves. Reduce exposure, test liquidity, reassess as headlines evolve. A classic playbook when uncertainty may last weeks, not days. Here's why the market reacted that way. First, risk premium went up. When credibility is in doubt, investors demand more compensation to hold risk. That shows up immediately as lower prices. Second, growth expectations drop. Public work drives demand from materials, logistics, and jobs. If those projects face suspension or cancellation, companies tied to them lose revenue. Third, direct exposure risk. Contractors face payment delays and higher bid costs. Suppliers pull back, and everyone downstream feels it. Fourth, currency and funding pressures. When investors lose confidence, capital flows out. The peso weakens and banks tighten lending. It's a ripple that affects even small businesses. Finally, institutional memory. We've been here before. From the 1990s to today, every scandal reminds investors that governance has a price tag, and that price is trust. What the market and government did. The exchange publicly called for a swift, credible investigation, a direct link between governance clarity and equity recovery. Government and courts formed an independent probe and froze assets. Regulators tightened compliance rules, including limits on large cash withdrawals, a signal that the system was reinforcing discipline. These actions can cut both ways. They can confirm that the risk was real, which unsettles markets, but they also show that the state is acting, which helps restore confidence. What matters most is execution, speed, transparency, and professionalism.